We have a very interesting setup here in gold, and I believe odds are very good that we are going to see a large trending day soon, and I expect it to be to the upside. I will explain to you in this video how you can identify a trend day before it happens, and more importantly, how to prepare yourself for the shakeout that will happen before the trend day actually occurs. What you see here is a 30-minute chart of gold futures, and there are green and red zones drawn on the chart, and that is an indicator that I wrote that tells me where is support and where is resistance. So when you see a green area drawn here, it tells me there is support. When there is a red area drawn, it tells me there is resistance. Currently we are above both support and resistance, but it is very unlikely that price will simply go straight up from here. What I expect to happen is a violent shakeout before we see the final move to the upside. And let me explain to you why. When support and resistance are close by, so here we have support and just above that we have resistance. Whenever we see that, it tells us we have a temporary equilibrium. And when price tries to escape from that equilibrium, it doesn't have enough oomph to get away from that price, so it gets back to that equilibrium. Here it tried to escape to the upside, but the gravitational pull towards that level was too large. It came back. It tried to escape to the downside here, but the gravitational pull was too large. It came back there. Now we are making another attempt to escape to the upside. I expect this to fail too. So we will likely come back to that equilibrium. And before we make the final move to the upside, I believe we will need to see a stop hunt first. Let me draw a couple of lines to explain what I'm talking about. We had a local high over there, and we had a local low here. This wick was a temporary low. What usually happens before we see a large breakout to one side or another, that both longs and shorts get shaken out before the real move happens. What I mean by shaken out is, if I am long somewhere in this neighborhood, I took a long position, I will most likely place my stop below a recent pivot low. This here would come handy, and there is a lot of people who would have had their stops just below this wick. So no surprise that that wick here got violated and these stops all got hunted, because large institutions cannot simply place a large order in the order book. If I wanted to buy 2,000 contracts, I can't simply go to the order book and say, can you please sell me 2,000 contracts? The order would never get filled. So what do the large institutions do? They hunt our stops, because if we have a stop order here, it becomes a market sell order when triggered, and that is exactly what the large institution who is trying to accumulate a large long position is looking for. It wants to get in at a cheap level, and a level that has a lot of liquidity. And all these places where the regular guy like you and I, where we would place our stop, that is where the liquidity sits, because we all think alike. Oh, this low here, as long as we stay above, it's bullish. It's nonsense. Because there was a local low, it will get taken out because there is liquidity here. So first we need to wait for a stop hunt. But I want to see it on both sides before the breakout happens. Before we see a large move, more often than not, we need to see pain. We need longs and shorts to get stopped out. So if we were to take out this high, everybody who is currently short will get taken out. But everybody who has been long after we put in this low here has had little pain to endure. There was a little pain on this wick. But if you placed your stop somewhere here below that local low here, you have not endured any kind of real pain. In other words, all those longs are still in the market, and they need to be cleared out before that breakout to the upside can occur. And big institutions will probably use a catalyst. Some news comes out where the liquidity is ahead of the release is very thin. They will then push price below that level, and here where all the stops sit, they will have iceberg orders waiting that you cannot see in the order book. But when a certain price level is triggered, within milliseconds, they grab that liquidity that is provided. They're going to buy 100 contracts here, 200 contracts there, and they will do it as long as it takes until they have the position size that they are interested in. Once they are comfortable with the size of their position, that is when they can place a regular order that is visible in the order book. And once you see a large print in the order book, everybody knows there is a large institution willing to push price higher. That is when we are going to see momentum to the upside. We're going to take out this high, and then we will most likely never look back and keep on going and going, which means we are leaving most people behind, because it will happen so quick and it will be very painful for everybody who was long prior to that shakeout. In other words, what I expect to happen is a break to the upside, taking out all the stops of people who are currently short, then a break to the downside, taking out all the people who are currently long, and then a massive move to the upside.